Okay, we are live. Thank you everyone for joining today. This is Tom Lombardi from Wave Financial. I'm going to be called the VJ for the day. We have an excellent lineup of speakers from various backgrounds, tackling investments, derivatives, digital securities. And we're going to start with David Seymour, CEO of Wave Financial.
Hi, everyone. I'm David Seymour. On behalf of all of us at Wave Financial, welcome to the first Wave Digital Asset Perspective Summit. Bit of a mouthful, we'll work on the title. Our goal for this series of virtual sessions is to bring together the brightest minds to help shape the future of finance. And we do mean all finance, not just blockchain, crypto finance. One of Wave's goals from incorporation has always been to be a bridge between the traditional finance world and the digital asset world. And these events are designed to foster those industry partnerships. So first and foremost, we are incredibly honored that so many entrepreneurs, investors, and industry leaders have taken the time to join us, many of which are staying up well past their bedtimes, because this is truly a global conference with speakers from all over the world. So a huge thank you to all of our speakers and attendees. We truly appreciate your efforts to be here. Just quickly about Wave Financial. Wave is a leading digital asset management firm that is a registered investment advisor. So we are a fully regulated company. We have two main business groups. One operates several separate, digital asset funds, focused on strategies like venture capital investing, index and tracker funds, derivative-based, yield products, as well as some hard asset funds like the new whiskey fund we just announced, which if you haven't seen it yet, check it out. It's really cool. The second business group we operate is a treasury management managed account business under our RIA licenses. So we help large protocols and high net worth investors maximize, both their crypto and fiat holdings, typically through, derivative strategies and lending. Today we come together for a short 3.5-hour virtual conference focused on just three main topics: investing in digital assets, crypto derivatives, and digital securities. We're fortunate to have leaders of those industries join us today. We'll finish today with a fireside chat with legendary investor Tim Draper. But first, our first speaker this morning is Charles Hoskinson. Charles, as all of you know, was one of the original co-founders of Ethereum, then co-founded what became BitShares with Dan Larimer. Charles then launched his current project, IOHK and Cardano, of which we are investors and huge fans, and always super excited to hear more about how the platform is progressing. So with that, please welcome Charles Hoskinson to the virtual stage. We'll all imagine there's a virtual applause. Thank you, guys.
Yeah. Hi, this is Charles Hoskinson broadcasting live from warm, sunny Colorado. I'm the Chief Executive Officer of Input Output, and first I'd like to thank Wave Financial, Les and Dave for inviting me to speak and share a few thoughts with all of you. This is an interesting time. I love doing things in person. I'm a bit Italian, so it's good to have face-to-face contact, but I guess we have to find new ways to communicate. The world as a whole is changing fairly dramatically. Ever since the event of the internet and globalization began, starting in the 1960s and 70s, we've seen a tremendous change the way we do business, the way we invest, and the way assets work. And the old rules are no longer holding in any capacity. So we look at recent events, for example, this concept of a global quarantine. It was probably inconceivable 6 months, 7 months ago that the entire world would shut down for something, because we didn't even do that during nuclear warfare in World War II. It's a crazy, crazy time. And the United States recently printed $6 trillion out of thin air, just invented it, ran on a spreadsheet and said, okay, there's no consequence to that. If we do the math real quickly, we start understanding the magnitude of these numbers, and the long-term implications of them are uncertain. For example, if you wanted to, you could take every single adult in the United States under the age of 55 who is working and just start giving them $2,000 a month. And you could do this and only spend about 1/5 of what we printed out of thin air as a short-term response to a single event. We see that there's a problem with globalization. There's friction in globalization, where there are winners and losers, and many of the poorest countries are having a difficult time acclimating. They have to rapidly and radically change all of their systems, their supply chain systems, their legal systems, how they handle basic things. So the point of the cryptocurrency space isn't about money. It's not about Bitcoin. It's not about going to a market cap and saying, did I go up 5% or down 10%? Really, the abstract point of our industry as a whole is about trust. Trust amongst parties who have to work together but don't really trust each other. And when you look in society, you start realizing that there's a lot of that in the telecommunication business. Many of you have cell phones, if not all of you. Well, if you do, you have a carrier, and you don't live in the fiefdom of a single carrier because you travel. If you go to Switzerland, you're in Swisscom. If you go to Mongolia or Mobicom, go to the United States, we have AT&T and T-Mobile and Verizon. Yet somehow you have to be able to seamlessly move between these networks. Now, all of these networks in some ways are competitors to each other. They don't trust each other. They don't want to share information. But for the good of their customers and for the functioning of the system, they have to talk to each other. Recently, everybody has become well more acquainted with the supply chains of personal protective equipment, ventilators, medical equipment, and medicine in general because of this pandemic. And we're starting to realize how incredibly fragile that global system happens to be. Things as simple as mass manufacturing of masks, which should be an easy affair, has turned into a super complex logistical nightmare with tons of issues from hoarding to profit-seeking behavior and other things leaking in and ultimately hurting the most vulnerable amongst us. So we ask ourselves, why is that? It's because these systems were built in a very fragmented way. And what we've been doing to try to fix these systems has been simply adding another layer of complexity, another layer of regulation, or in many cases, just adopting a single standard, whether it be the Chinese standard or the European Union standard or the US standard. And we're starting to realize that this system is very fragile, it's very brittle, and unfortunately, when big events happen, it shatters it. So 2008 is responsible for the birth of Bitcoin and a global conversation of decentralized money and decentralized assets. And since that time, our industry as a whole has grown to a point where we've started a global conversation of the decentralization of trust, the removal of middlemen, the disintermediation of things. If we look at the transaction itself, there are really 5 components to it. And we're starting to think in abstractions as a consequence of our industry. So the transaction holds assets. The transaction is between entities. The transaction has metadata. The transaction has a contractual component and a regulatory component. And we're starting to realize that all of these things can be templated, they can be made machine understandable, and that transactions can be made universal in a certain way. It's almost like a financial stem cell, if you will. So instead of looking at stocks and bonds and looking at commodities and looking at intellectual property and even non-fungible assets like your time as distinctly different things living in different markets subject to different regulation, instead we can actually represent all of them with universal systems and allow them to flow at the speed of thought like information does between millions of actors, if not billions of actors, and ensure that things like the rule of law, consumer protections, and proper oversight is installed. My own company does a lot of business in Africa, and this is one of the most exciting continents to do business in. For example, we have an office in Ethiopia. We constantly talk to people in Uganda, South Africa, and other places. And if we were just to look at Ethiopia as a snapshot of the continent, there you have 106 million people, with 70% of the population at or under the age of 30, who are mostly digitized, internet aware, and desperate for new systems. So when you ask yourself, where is the greatest growth going to be? Where are the greatest minds going to come from, the consumers? It's always defaulted to the countries that are young. Yet this country is laden with terrible systems, capital controls, poor rule of law, bad property rights, a lot of issues around the ability to get liquidity. Banks are not as stable as they need to be. There's not even a stock market in this system, which is quite unfortunate. So then you ask yourself, will this population, which is overwhelmingly young, accept that? And the reality is no. And the economy is growing 10 to 15% per year. So as they rapidly digitize, this is a great opportunity for them to embrace completely new concepts of regulation, completely new concepts of markets, much like when Pakistan decided to start propagating phones. They had a choice of either putting copper wire in the ground and somehow figuring that out for all their people in very remote areas, or putting up cell phone towers and leapfrogging the prior generation. Similarly, there's going to be a GovTech, RegTech, and FinTech innovation in the developing world where they're not beholden to the multi-trillion-dollar ossified systems that we have, and they have a free opportunity to jump into state-of-the-art systems, which are intrinsically global, they're intrinsically decentralized, and they allow you to move reputation, assets, identity, all kinds of things, just like you would move a stock or a bond or send a wire transfer. And like the internet, it moves at the speed of thought. Settlement times can be in the seconds. Settlement times can be perhaps even faster, and you get certainty that you have the asset and you understand the terms and conditions of these things. There are many challenging problems that we see moving into the 21st century. There are severe privacy issues, and there's a lot of questions about the ownership of fundamental things such as data. And it's not really clear how we as business holders, we as governments, we as individuals are going to navigate all these things. For example, in China, we have the severe problem of social credit. This is where very sophisticated AI is being used with very sophisticated data models to create numbers and match those numbers to each person in China. And your freedoms in that society, your privileges or your lack of privileges will be in part or completely determined by that number. And unfortunately, even the government itself doesn't really understand where those numbers come from because they're artifacts of artificial intelligence. This is a reality that over 1 billion people are going to have to live with in the very near future by at least 2025, if not sooner. And so we have to ask ourselves, how should we represent reputation, good actors, bad actors, and who should be in control of that? Should the individual be in control of that? Should society be in control of that? Should machines be in control of that? The broader philosophical point of our industry and the pioneers in this industry, such as the speakers who will come after me, and the scientists who work at my company and the engineers that work with me, is to navigate this and ask ourselves, if we had to reinvent all the rules and we had to rewrite the entire system, where would we go? Why should we go there? Who should benefit? It's clear that the system we have now is rife with all kinds of inefficiencies, inequality, unfair asymmetries that have been pervasively taken advantage of, oftentimes against the least amongst us and the most vulnerable amongst us. But it's not clear where do we go, especially as the drumbeat of technology is so incredibly aggressive. Every single day, it seems like we keep getting new things. And unfortunately, there is quite a wisdom gap between when we invent the technology and when we know what to do with the technology. So if I had to describe what our industry is about, the blockchain industry as a whole, it's not about money, but it's rather about that philosophical conversation about how do we reimagine society, reimagine the way we work together, we trust each other, how we quantify things. Our own company, for example, in Ethiopia, right now we're bidding on a project for 6 million smallholder farmers for fertilizer vouchers. But when you start digging into the business and technical requirements of such a program, you start realizing how incredibly interconnected life happens to be and all the great investment opportunities that exist from that interconnection. Because when you build a voucher system, you're actually building a payment system. And actually, you're building an identity system. And then somewhere along the way, you're building a census system to get to know who people are. And then somewhere along the way, you're building a voting system. And then somewhere along the way, you're going to tether it to output. So you're building a supply chain system for agricultural goods. And then you start asking yourself, well, hang on. If we're doing all these things, isn't that just an economy into itself? We could put a regulatory system on top of it. And each and every one of those gives a great opportunity, a magical opportunity for all kinds of new business models and all kinds of new innovation. In fact, in our industry as a whole, we have emerging models of funding called treasury systems. Because cryptocurrencies are basically central banks and people treat them this way, you can, instead of just using the funds that are printed to pay for mining and other activities to maintain the systems, you could actually create a treasury that can pay for all kinds of activities, venture capital, the development of the code, the deployment of ATMs, the deployment of internet infrastructure, whatever the dreams and wills and appetite for risk the ecosystem happens to be. And of course, the ecosystem will live just like the US government does with the consequences of the underlying inflation that causes, and hoping that it's a good investment. So in the very near future, we could see dozens of entities start existing completely off of revenue from blockchains instead of actual customers. We already see this with certain companies like, for example, Horizon and Zcash that live completely off the treasury systems that they implemented in their own blockchain. And we'll begin exploring this with products on our side, such as Cardano and other blockchain systems that we create. It also means that companies of the future can have completely new ways of achieving liquidity and funding models. As investors, probably the thing you care most about in the near term is this new concept called a security token. And this is a really exciting prospect because it's an opportunity to redo 100 years of bad decisions that were made in the securities industry. You'll start finding out that you can automate regulation. You no longer need custodians. You can instantaneously prove if somebody's an accredited investor. You can easily send information to each person, and you can pay dividends very quickly. You can enforce clawbacks, and you can do this at an elastic scale. So you can go from $5 million capitalization companies and do an IPO all the way up to a Microsoft-sized entity or an Apple-sized entity. And these assets can be traded and moved on any marketplace seamlessly, and regulation can follow in those particular cases. And we are seeing tremendous innovation in that space alone. So there's a lot of things to get very excited about. This is why I've been in this industry for almost 10 years, and I'll stay for another 10 if I can and have the privilege to do so. And I just love how incredibly global it is. I'll close with a story. I was in Mongolia not too long ago, in the southern parts of Mongolia, and I was riding camels out in the Gobi Desert. And then stopping for some provisions, I had a chance to talk to a camel herder. And we, through a translator, had a nice conversation about the environment, how long he'd been a nomad. And he asked me what I did for a living. And I mentioned I was an entrepreneur in the cryptocurrency space. And his reply was, "You mean like Bitcoin?" And I said, "Exactly like that." And he said, "Oh, I own some. My brother holds it for me in Ulaanbaatar." So we've gone from a tiny movement with no one around to a movement where a camel herder nomad in the southern deserts of Mongolia can actually hold it. And it's a pretty remarkable growth in less than a decade. So thank you all for your time, and this is going to be a very fun event. Thank you so much, Wave Financial, for putting it on, and I can't wait to see the presentations that come afterwards. Cheers.